All right, good afternoon, everyone. Let's go ahead and get started. I want to thank everyone for joining us today. As always, we hope you'll find this presentation both informative and relevant, and that you will take away knowledge that you can apply to your organization. This is the fourth in a 5-part webinar series hosted by Innovus and Oracle. The last remaining webinar in this series is scheduled to occur next Friday, June 5th. And throughout this series, we've been discussing topics that encompass the evolution of planning and budgeting, focusing on pain points organizations and particularly planners face when managing their periodic planning cycle. Today's topic revolves around what-if analysis. Today's presentation will be broken down into 4 parts. There'll be a brief intro of Innovus and our speakers. We'll then walk you through a brief overview of what-if analysis. Krishna is going to deliver a live demonstration. And finally, we'll have some time for Q&A. As always, please make sure to submit your questions via the chat window throughout the presentation. We may address some questions throughout the webinar, and others we will make sure to address at the end. I just want to spend a moment talking about Innovus and who we are. So Innovus is a full-service provider of consulting services leveraging the Oracle EPM product stack. We have been an Oracle partner since 2012 and are recognized as a cloud excellence implementer using the Oracle EPM cloud products. All of our resources work closely with both users and Oracle product development to ensure our clients leverage the full feature set of the Oracle EPM cloud to get the highest return on their investment. Ultimately, as Innovus, we're striving to be that trusted advisor to our clients to help realize their vision of performance management and business analytics. We work exclusively with Oracle products, and we are fully capable of delivering demonstrations for all of the business processes in the Oracle EPM cloud stack. Once again, I'm Gary Sorel, Vice President in charge of project delivery at Innovus. I've been working in consulting for the EPM BI space for the better part of the last 10 years. I started on the client side and have moved on to consulting with EPM in 2012. That's when I joined Innovus, and since then I've been working closely with our team to become a successful EPM implementer and a trusted advisor to our clients. I would now like to give Krishna the opportunity to introduce herself. Krishna.
Thank you, Gary. Good afternoon, everyone. I'm Krishna Maru. I'm a consultant at Innovus. I have over 17 years of experience in the EPM, BI, and data warehousing field in both functional and technical roles. I will be running the demo for today's webinar. Thank you. Back to you, Gary.
Thanks, Krishna. Just to reiterate the schedule, this is the 4th in a 5-part series. Our last remaining webinar will be on Friday, June 5th. Today's session, as well as next week's session, will be 30 minutes. Recordings of our webinars will be posted on the Monday following the webinar on the Innovus website, and all registrants will receive the link through email. One other announcement I want to make is we are going to be launching another set of webinars, probably happening over the summer, so please be on the lookout for that communication. So again, today's topic is performing what-if analysis. I want to spend a moment just talking about what-if analysis in general before handing it off to Krishna to go into the live demo. So what-if analysis is the process of changing data values to see how those changes impact your business. What-if analysis allows you to model different business outcomes and evaluate different sets of assumptions. So if you want the ability to input different revenue drivers or things along those lines, you have the ability to create different scenarios within your business model, and you can evaluate those results and compare variances. Another important part of what-if analysis is the ability to reduce a business's risk by inputting variables and analyzing the outcome to the account for changing financial landscape. So we want to be able to account for the fact that the economy will move up, the economy will move down, sales will increase, sales will decrease. We want to be able to come up with an educated forecast as to what our business is going to do. And what-if analysis is a very important piece of being able to accomplish that type of financial modeling. In terms of the demonstration today, we're going to go through, or have Krishna go through 4 specific use cases. First, she's going to talk about a change in revenue drivers. She will then move on to changes to cost to achieve a target margin. She will talk about a result of the currency conversion fluctuations in the final plan. and then changes in margin due to a delay in a new product launch. So for that last use case, we want to use more of a real world or a very specific real world example where you need to change the date in which a product will launch and how that will affect the company's financials across different scenarios or versions, and the ability to compare the two. And with that, I would like to hand it off to Krishna. So Krishna, please take it away.
Thank you, Gary. Let's move on to the demo. Today's demo will mostly be on the web. We will switch between the web and Excel for different use cases, but most of it will be on the web. We'll start with our use case 1. So there's have a dashboard for a set of dashboards for WhatIf Analysis. For the use case 1, we will be looking at when we change revenue drivers or cost drivers, how that will impact the existing plan. So the existing plan, in this example, we're saying that there is an existing plan and we want to make some changes to the existing plan to see how it changes the total margin, the revenue, or the costs. So last week we covered version, how to manage versions in planning. This is a part of, we will be using the copy version a lot in today's demo, which we covered last week. So first thing, with the assumption that there is a working budget and you do not want to change the working budget, but want to make a copy of the working budget and change a few drivers to see how that the budget is impacted, we will copy the working version to a version called WhatIf 1. So we will set that set. So now I have the working version in WhatIf 1 version. If you see the various data elements in the dashboard here, the variance is there is really no variance. The data is the same because we just copied over the WhatIf version, data to WhatIf version. Let's say in this use case, we want to change or introduce a promotion to provide a higher discount for all the smartphones. So if you see here, there's 3 smartphone products. So we will go and change the discount for each of these products and also the volume of phones that we expect to be sold depending on the discount. So I will change the discount in WhatIf 1 from 4.46% to 6%. And with the assumption that if the discount changes, the volume will also increase. I'm going to change this to 130,000 units. And save. So as soon as I save this here, you will see that these dashboards also have got updated where the total revenue now, because of the increase in volume, has changed, but there is also an increase in negative revenue or discount. So that, including all that, the revenue has changed here. So as the cost of sales, and so has the net income. We will change this for all the products and take a look at how it impacts the total organization margin. So changing the product, set the discount to 6%, and the volume, assuming the volume will change to 60,000 units. Save it. So there's a rule that's running in the background that is calculating the revenue, and since this is a driver, the volume times average selling price is the revenue. Revenue is being calculated, and the other costs are also being calculated, and your net income is being generated. I'll change the next smartphone, but for this, let's just change maybe just the last 2 quarters. So change Q3 to 6% and Q4, and leave the first 2 quarters as is. Change the volume to save. So as you can see, your data is changing, and you're able to right away see the variance in your WhatIf version, or how it is impacting your total income or margin based on the changes that you made to one or a handful of products. So we just changed the revenue drivers, but you can see that the working data and the WhatIf data has been calculated right away, and the differences in the net income for the total for all products in the entire organization. We'll move on to the second use case.
Krishna, sorry, I have a quick question before you move on. So with these revenue drivers that you're working with, are there any limitations to how they're created? Are these custom revenue drivers? Do you have the ability to build custom revenue drivers, or are these out of the box?
So what I showed in the demo here are out of the box, but you can definitely build as many custom drivers as you want. The drivers can be sourced from a source system. You can have the drivers being input by the users, or you can even have various formulas or seed them using historical actuals. So you can have as many drivers and whatever kind of drivers you want for your business. There's no limitation on that. Sure. So in that context, the second use case actually does use a custom driver. So gross profit. This is a custom driver which calculates your gross profit based on total revenue and cost of sales. But then over here, I'm going to enter data into gross profit. So over here, we are trying to show a use case where you want to achieve a certain margin, and you want to see, saying your volume of products sold or your revenue is constant. So your average selling price, volume, none of that is changing. Your revenue is constant. You want to meet a certain margin target, and you want to see how much to reduce the cost by to get there. So in order to do that, again, we will copy the existing working version into another WhatIf version called WhatIf version 2, and change the gross profit to see how it impacts this product as well as the entire organization's bottom line. So first thing I will do is copy to WhatIf 2. So as you see here, it's all equal right now. I've just made a copy. And we will stay with this specific product, smartphone 4. The gross profit as the system calculated is 35.7. Let's say we want to meet a gross profit of 45%. That is the target, and you know your revenue is not increasing, but you can reduce your costs. So in order to get there, the system will, now when I submit this, there's a rule that runs in the background that will actually calculate each of the cost of sales line items using the historical actuals weight and allocate that to the total cost of sales. So, oh, I saved the wrong. Save. So now you see the new cost of sales has been calculated, and you can see, sorry, just making sure it is. So the revenue remains the same, no change in the revenue, and you can see that in this chart, but your cost of goods has changed here because you're saying keeping revenue constant, if I want to achieve a higher gross profit, what is the reduction in costs? So over here, you can see that the reduction in costs is around $4 million in total if you wanted to achieve a certain gross margin for a specific product. So this is, and if you see for the total organization, the margin there is also increasing a little bit, but with slight, with very little change in your costs. So that's use case 2, and this is actually an example of a custom driver that's being used in the system. We will move on to the next use case. I will switch to Excel for that. in this next use case, we will talk about the FX changes. So last week, we talked about constant currency, so using versions for constant currency, and what if is that constant currency is a kind of what if. What we did in constant currency was we tried to remove the FX fluctuations period over period so they can be compared one-on-one, apples to apples. In today's demo, in this use case, we will actually see how the FX fluctuations or changes or movements in FX impact the budget that was set. So from the starting of when the budget is set, let's say if an organization starts setting the high-level budgets or targets in the month of July or August for the following year, but by the time the planners come in, enter their plan and submit their numbers and the budget is finalized, it's usually the following year of January or February. In such an instance, when there's a multi-currency plan that's being submitted, FX changes, movements will happen. And when these FX movements happen, from when it started to when the budget was final, you may want to see what you thought was achievable at a point in time when the budget started to what is actually achievable now, given the FX movements. So over here in this example, just change to working here. So the current working version has these FX rates. And then I will go to WhatIf version 3, where I have already submitted a different set of FX, as you can see. So we will go to the next tab, and we will copy again the current working version to the WhatIf 3 version. But over here, we are not really changing any drivers. We're not changing any numbers. We're keeping everything constant, but just saying, just because of changes in FX, how is my budget impacted? So I will run a rule that will apply the FX rates in WhatIf 3 to the data. The first thing we'll do is copy the data, copy for FY18 plan, and I'll copy it to WhatIf version 3. So let's do a refresh here so you can see data was copied and it is all equal right now. We will apply the FX rates. We'll run another rule that applies the FX rates to the WhatIf 3 data. Let's do a refresh. Now, if you see there is a variance because of because of no other change but changes in FX. So your revenue has increased by around 2 million. So has the costs. So the revenue and expenses both have increased. So if you really see, there is a slight difference in your gross margin, and there is an even smaller difference in the net income, but there still is a difference. So instead of being able to achieve a gross margin of 40.68, you now, due to the FX changes, you can now achieve 40.72. That is with FX. So just to talk a little bit more about this. So if you wanted to do an FX for just one customer, let's say, you can do that too. So it needn't always be just for the entities. If you had a customer dimension, you can associate an attribute with the customer for the FX and apply it only for one customer. So you don't have to change the entire data set. You can just see, you may have a major customer in a country where the FX has moved a lot. You can apply this to just that one customer and run this analysis to see how it has changed your margin too.
Krishna, a question just came in through
Yes.
the chat.
Okay.
When you have finished your what-if analysis, I think this may have been covered last week, but maybe it'd be good again to cover this week. how do you move your what if data into your working so that you could publish it? Or what are some options that are available to you?
Okay, so yes, we did cover these last week. So that is the copy version. So once you're done with your what if, so we have so far we've done 3 different what ifs here, and depending on what a combination or what you like the best that you want to finalize your budget as, you can copy that back to the working version. If you want to make a backup of your working version, you can do that, or you can create a final version and copy your plan to the final version member and lock that, make it read-only so no other users can see it. You can run a rule to copy it, or you can use the out-of-the-box functionality in the system that allows you to copy versions. So that is, if you go to back in the web, there is this copy versions. You can use this to copy your working data or what if data to another version. Okay, moving on to the next use case. So in the next use case, we will see how a product launch delay could impact the company financials. So if we say we're launching a new product and the working version anticipated the product to be launched in Q2, and that's where the data is set up right now for, let me change the product. Let's say the new product is the Envoy UltraSim notebook. And the anticipation for, the expectation for the product launch when the working version was being done is Q2. But now due to changes, certain changes, if now you think that the product is not going to be launched in Q2, but rather in Q3, we can change that to see how it impacts the gross margin. So we will first copy the data from working version to WhatIf 4. And now you have the same data in working as well as WhatIf 4. But for WhatIf 4, I want to remove the revenue coming in for this product because the product is not going to be launched in Q2. So if you see right now, everything is the same for this product. I'll delete the revenue. There'll be no returns if there were no sales. So we will delete that too. And we may not have as many labor expenses. I will just clear out this. But then we just leave the material and other costs because there will be some costs associated. So we just and save that. Okay. Now you see the variance very clearly here in that product, how that specific product's gross margin and net income was impacted. So if you scroll down here, you can see this numerically too. So instead of having a margin of 48.9%, because of the delay, now the gross margin for the year would be 39.6%. This shows you the variance for this specific product. Now, there is a huge difference in margin for this product because there's a delay in 1 quarter. But if you now we can look at how at a total organization level, how this is impacted. So let's go back to the Excel. I have a few smart view pull here like I showed previously. So we go to the WhatIf product launch tab. And so this is for not just one product, but the entire organization. Do a refresh here and you will see the variance in product revenue. But if you really see, there is not much change in your gross margin or net income. There is a slight change, but not as much as you saw it at the individual product level. So you can create, again, custom analysis or ad hoc retrieves to look at the variance at a product level or at an entity level or at a total organization level. I have another pull here that actually just shows all the 4 what-ifs. So we've covered 4 use cases in 4 different versions. So a refresh here, and we can see the variance of how the margin was impacted with each of these changes. You can compare these. Again, you don't need to create a new version for every change that you will be performing. You can have multiple changes in one specific version, but if you want to track each change separately, then you will want to create a version, do the comparison, and then you can merge various scenarios or use cases into a single what-if to see how the total impact looks too. That actually ends the demo. If there's any questions, you can take them.
Krishna, another question came through the chat window. If I already have an application and I want to implement this functionality, how do I go about doing it, and what's the level of effort?
That's depends on the complexity of your application, but if you already have an application, it's creating new version members. And if you wanted any drivers, you would have to create those drivers. You'll have to create business rules that will calculate your data based on these drivers. So it depends on what you're trying to, what kind of what-if you're trying to do. If it's FX, then yes, it's more involved where you have to do the conversions for the entire data. If it's drivers, then you have to create your drivers and do the calculations. If it's just changing the numbers, then all you need to do is aggregations. So the level of effort really depends on what you're trying to achieve, but it can be done with an existing application. All it requires is scenarios, and you have to write some business rules.
So it sounds like you would need to sit down, just to understand what the true requirement is around accomplishing what-if within the application, and then define the scope of those, what we would build out within to satisfy those requirements, and then implement it into the existing. Like it's fully capable of actually implementing it in an existing application.
Oh yes.
Great. That's
All
the
right.
last question that I have.
Thank you very much. All right, perfect. Yes, I don't see any additional questions in the chat. So with that, we'll conclude today's session. Thank you everybody again for joining. Keep in mind, we have our final part in this series next Friday, June 5th. It will be around valid planning intersections. So I look forward to seeing everybody next week. Have a nice weekend. Thank you.
Thank you, everyone.